Good morning, and having maintained a tight trading band through much of last week, the Australian dollar enjoyed strong gains on open yesterday and now looks set to test resistance at 75.90 and 76 US cents. And today we'll explore the possibilities and scope for any further advances moving forward. While we've seen a renewed demand for risk appetite and increased improvements across equities and commodity prices, last week's lacklustre quarterly wage growth report and the increase in the unemployment rate do little to assuage fears that inflation and interest rates will remain stagnant through the foreseeable future and into the first part of 2019. And when we couple that with the expectation that the FOMC will raise rates possibly as early as next month and then again before the end of the year, that increased US yield differential should weigh on further upside gains for the Australian dollar and keep those upward moves capped around this current handle, while we are well supported around moves towards 74.50. Given the outlook for the Australian dollar versus the US is bearish, we thought we'd explore other currency pairs, and we've seen the Australian dollar enjoy strong gains against namely the euro and New Zealand dollar through the last few weeks. The euro's collapse has really come on the back of fiscal blowout fears out of Italy and requests for debt forgiveness toward the ECB, and that has only increased fears that the inflation story and stagnant growth picture within Europe at the moment is only going to lead the ECB to extend the QE program, and interest rates will remain flat well into 2019. The New Zealand dollar also tested 109 and looks firming up at 110 as well, as the RBNZ's outlook now contrasts with our own Australian Reserve Bank and a possible move lower in their interest rates at the next RBNZ meeting. Of course, for further guidance and other currencies, please contact our teams.